Hello and welcome. So today we are starting a new standard, standard 2.2, safeguarding objectivity. So as per our practice, we'll start with asking some interesting questions and then try to get the answers to those questions while we review this interesting standard. When objectivity is impaired, internal auditors must refrain from assessing which assurance engagement shouldn't be overseen by the chief audit executive. How can conflict of interest impair objectivity? Objectivity is presumed to be impaired if an internal auditor provides assurance services for an activity for which the internal auditor had responsibility within previous how many months? Let's try to get answers to these questions while we review this standard. So just to refresh ourselves, we are covering the global internal audit standards. These are the new standards which are applicable from January 2025, and we have covered already first domain, and now we are covering the second domain, which is ethics and professionalism. Then in ethics and professionalism, if you see, there are 13 standards and 5 principles. The first principle, demonstrate integrity, is already covered, which was comprised of 3 standards. We are in the middle of now second principle, which is maintain objectivity. The maintain objectivity is having 3 standards. The first one, 2.1, we covered in the previous video, individual objectivity, and this one, safeguarding objectivity, which we are covering in this video. And the next one is 2.3, which is disclosing impairments to objectivity. So let's get off to a start. So principle 2 is maintain objectivity. So what is maintaining objectivity? Internal auditors maintain an impartial and unbiased attitude when performing internal audit services and making decisions. So if you see the definition, the objectivity is an unbiased mental attitude that allows internal auditors to make professional judgment, fulfill their responsibilities, achieve the purpose of internal auditing without compromise. So now internal auditor has to remain impartial, and unbiased attitude means there should not be any favoritism, there should not be any liking, disliking, and there should not be any effect of any friendship or relationship. And not on the basis of hearsay, but on the basis of what evidence is there on the table. Internal auditor has to make his or her decisions. An independently positioned internal audit function supports the internal auditor's ability to maintain objectivity. So if you are positioned there independently, that helps the whole independent internal audit function collectively, as well as the individual auditor, to maintain the objectivity. So now understand the basic requirement of standard 2.2, safeguarding objectivity. Internal auditors must recognize and avoid or mitigate actual, potential, and perceived impairments to objectivity. Internal auditors must not accept any tangible or intangible item such as gift, reward, or favor that impair or be presumed to impair their objectivity. Internal auditors must avoid conflict of interest and must not be unduly influenced by their own interest or the interest of others, including senior management or others in a position of authority, or by the political environment or other aspects of their surrounding. Why establishing methodologies are important for a chief audit executive or an internal audit function? So chief audit executive must establish methodologies to address impairments to objectivity, and must discuss the impairments and take appropriate action according to the relevant methodologies. So that means that the chief audit executive always should discuss the different scenarios and cases with the team which may arise, because sometimes or some auditors may not be able to recognize a situation which is making them biased or which is having an impact of conflict of interest. So that's why these methodologies are important to establish, and so that the impairments can be recognized and then addressed. When performing internal audit services, Internal auditors must refrain from assessing specific activities for which they were previously responsible. Objectivity is presumed to be impaired if an internal auditor provides assurance services for an activity for which the internal auditor had responsibility within the previous 12 months. If the auditor's function is to provide assurance services where it had previously performed advisory services, the chief audit executive must confirm that the nature of the advisory services does not impair objectivity. And the chief audit executive must assign resources such that individual objectivity is managed. Assurance engagements for functions over which the chief audit executive has responsibility must be overseen by an independent party outside the internal audit function. With regard to the disclosure of the impairment, if the internal auditors are to provide advisory services relating to the activities for which they had previous responsibilities, they must disclose potential impairments to the party requesting the services before accepting the engagement. Also, when objectivity is impaired when situations, activities, or relationships may influence internal auditors' judgment and decisions in a way that may change internal audit findings and conclusions. While considering the implementation of impairment to objectivity and safeguarding your objectivity, there can be different scenarios. Impairment to objectivity may exist in fact or appearance even when they are unintended, or objectivity may be perceived by others to be impaired even when no impairment has occurred in fact. So, what to do? Internal auditors should apply judgment regarding additional circumstances that may impair or be presumed to impair the objectivity. While considering the implementation of the Standard 2.2 safeguarding objectivity, another scenario is conflict of interest. The conflict of interest are situations in which an internal auditor has competing professional or personal interest that may make it difficult to fulfill internal audit duties impartially. So, conflict of interest may create the appearance of impropriety that could undermine the confidence in an internal auditor, the internal audit function, or the internal audit profession, even if no unethical or improper act results. So let's see some examples of conflict of interest to have clarity over the subject. Conflict of interest includes situations, activities, or relationships that may, in fact or appearance, oppose or compete with the interest of the organization, or create the potential for undue financial or other personal gain, or be established solely to protect oneself from potential or actual loss or harm, or be nepotistic or provide favoritism to certain individuals. Like in real life, you can see that for example, if you are a procurement department doing a procurement department audit, and the procurement department is entering into a new deal with someone who is your relative. So if you are doing an audit, and if you see that that deal is happening and you are part of the audit team who is reviewing the procurement department activities, you need to highlight that you might have a conflict of interest over certain contracts which are executed with this party, which is your relative. So again, from the audit perspective, you might be biased on that contract or certain on the process of that contract, the way the guy that vendor has been hired. So you need to highlight and disclose your conflict of interest. There can be other examples as well. For example, if you are auditing a certain department and you have worked in that department previously, or you have relationship with some of the people in that department, which is disclosed properly, then you have to avoid, because even though if it is disclosed, and you might take care of your conflict of interest or bias mindset, but because it is perceived that you are a relative, that may have an impact on the internal audit function conclusions at the end. As we were talking about the methodologies which the internal audit should establish to safeguard the objectivity, so there should be some documents they can maintain, which are the internal functions should specify the expectations and requirements for the internal auditors, like if they are have receiving any gifts or favors or rewards, they should document. If the valuation has to be done, they need to do the valuation, because some organizations having gift policy and giving a value that for a minimum value that should be disclosed, or an amount of a gift of a certain value can be kept by any person. So that valuation part can be done. And then identifying situation that may impair objectivity, responding appropriately upon becoming aware of an impairment. So if we try to connect three things, which is the company policy, the internal audit policy, and linking it with the performance evaluation. So the company policy can be is relating to the gift, for the acceptance of the gift, rewards or favors, such as policy limiting the value of gifts that can be accepted. The internal audit policy, because of the importance of the objectivity in practice, the chief may have a policy that is more restrictive than that of the organization. And the chief audit executive should take precautions to reduce the potential impairment to objectivity that may result from the design of performance evaluation and remuneration arrangements, bonuses, and incentives. So the examples of the remuneration arrangements that may impair objectivity includes basic performance evaluations and remuneration primarily on surveys of or input from the management of the activity under review, management performance against the number of findings identified, the revenue growth of the entity, of the activity or entity, or the cost saving or job eliminations imposed upon the activity under review, allowing management to provide indirect compensation in the form of gifts and gratuities. The internal auditors should apply their understanding of the objectivity and the relevant policies and procedures to evaluate whether any situations, activities, or relationships may impair or may be presumed to impair their objectivity. The perceptions of other people should be considered. The requirement of staffing and supervising engagements are intended to ensure that the internal auditors assigned to an engagement were not recently responsible for any aspect of the activity under review, which may bias their view, giving them a vested interest in a particular outcome, or create the perception or appearance that their objectivity is impaired. So now this needs to be assessed that for each activity or engagement undertaken by the internal auditors, they should be independent from the activity under review. And when planning resources for an engagement, the chief audit executive or a designated supervisor should discuss the engagement with the internal auditors to identify any current or potential impairments to objectivity. Now, this discussion should include the considerations of any impairments previously disclosed. As part of the process of supervising engagements, work papers are viewed to ensure findings and conclusions are adequately supported. The engagement supervision also provides opportunities for more experienced internal auditors to provide feedback and mentoring regarding potential objectivity concerns. So in order to ensure conformance with the standards, some evidence needs to be kept for those conformance in relevance to this standard. These can be policies and procedures for identifying potential impairments and necessary safeguards, records of objectivity training, documentation through which internal auditors attest that they either have no known impairments or have disclosed potential impairments. Sources of feedback on the perception of internal auditors' objectivity, such as surveys of internal audit functions stakeholders, notes from supervisory reviews, remuneration plan, minutes of board meetings where impairments to objectivity were discussed, plans showing alternative provisions to fulfill the internal audit plan activities where impairments to objectivity were unavoidable, results of external quality assessments performed by an independent assessor. So this concludes our review of Standard 2.2, Safeguarding Objectivity. The second standard of Principle 2, Maintain Objectivity, which is part of Domain 2, Ethics and Professionalism. Hope you like the video, you have learned from it, and we have moved on in understanding this principle and improving our understanding on the objectivity. We covered individual objectivity in the previous video, and we covered safeguarding objectivity in this video. In the next video, we will be covering disclosing impairments to objectivity. So please like the video, share the video so that other auditors also can get benefit from the video. Thank you so much.